We've got a fascinating show lined up for you, with stories from around the globe that are shaping the financial landscape. Let's start with some news from the banking sector. It appears that the pace of garnering special foreign currency deposits by Indian banks has slowed down after an initial enthusiastic response. The reason behind this slowdown is attributed to high net worth overseas Indians seeking double-digit dollar returns and assessing tax implications on these instruments. Bankers are finding it challenging to offer attractive leverage to clients due to expensive dollar funds, which have increased the cost of borrowing for banks. This has caused a rethink among banks on the amount of leverage they can offer, making it difficult to provide the promised double-digit returns. The math just isn't adding up, with overseas borrowing costs spiking and banks struggling to balance their profit margins. Meanwhile, in other news, analysts are weighing in on the performance of major banks, including JP Morgan and Bank of America. Some experts predict that these banking giants will continue to thrive despite economic uncertainty, while others warn of potential pitfalls ahead. We'll be keeping a close eye on these developments and bringing you updates as more information becomes available. In other international news, a recent article highlighted the slowdown in FCNRB flows, which has significant implications for Indian banks and their ability to attract foreign investment. The story also touches on the Reserve Bank of India's guidelines for garnering these deposits and how they're affecting the market. We'll be exploring more of these stories and their implications for investors in the coming segments. From banking and finance to stocks and markets, we'll cover it all on the Riskwiser Zone. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. Our middle segment takes a look at how one couple achieved their goal of generating a steady income stream, allowing them to reclaim their time and live life on their own terms. A recent post on Reddit caught our attention, where a registered investment advisor shared the story of his wife, who was struggling with burnout from her traditional 9-to-5 job. After inheriting assets from her parents, she decided to use a portion of those assets to create an investment portfolio designed to generate recurring cash flow. The advisor worked with his wife to build a portfolio that includes a mix of income-focused funds and broad market index funds for long-term growth. The goal was not to maximize returns but to convert part of her inherited assets into a steady income stream, allowing her to step away from her stressful job. The portfolio currently generates around $5,100 per month in distributions, which is roughly $60,600 per year. While this approach may not be suitable for everyone, it is an interesting example of how strategic investing can help individuals achieve their financial goals and create more freedom in their lives. It's essential to note that investments with higher income potential often come with higher risks, and payouts can fluctuate over time. The advisor emphasized that this portfolio was built around a specific household goal and may not be a one-size-fits-all strategy for everyone. However, the story highlights the importance of considering alternative approaches to traditional retirement planning. By using their assets to create a steady income stream, this couple was able to reclaim their time and live life on their own terms. As we continue to explore stories of financial freedom and strategic investing, it's crucial to remember that everyone's circumstances are unique, and what works for one person may not work for another. It's always essential to consult with a financial advisor and carefully consider your individual goals and risk tolerance before making any investment decisions. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to shift our focus to some promising growth stocks that have caught my attention. Our first story highlights 3 incredible growth stocks to buy now, according to The Motley Fool. These include ServiceNow, Marvell Technology, and surprisingly, not NVIDIA, despite its dominance in the AI compute market. It's interesting to note that while NVIDIA is a leader in this space, Other companies like Amazon are exploring opportunities to sell their own high-performance processors, such as Trainium chips, to third-party customers. This development could potentially open up new avenues for Marvell Technology, which helped design these processors. On the other hand, ServiceNow has been gaining traction, with its stock recently rebounding around 18% after a sell-off of roughly 27% over the past 6 months. Management expects fiscal second quarter 2026 subscription revenue to grow by 22.5% year-over-year, and Wall Street is bullish on the stock ahead of its earnings release. Guggenheim has upgraded ServiceNow to buy from neutral, setting a $125 price target, citing the company's attractive valuations and potential for double-digit organic growth rates. However, it's essential to maintain a balanced perspective and consider other AI stocks that may offer greater upside potential with less downside risk. As we navigate this complex landscape, it's crucial to remember that every investment carries inherent risks and rewards. As your trusted guide in the Riskwiser Zone, I encourage you to conduct thorough research, stay informed, and always prioritize caution when making investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.